Hey traders, welcome to a crypto market update. In this video we're going to be talking about the correlation of the S&P, which is the 500 largest companies in the United States, and the price of Bitcoin. So a positive and negative correlation means with a positive correlation they're moving in the same direction or similar direction depending on how strong it is, and then a negative would be vice versa. They're opposing the directions that they're moving in, so they're going in the opposite way. And we can see right now, this is basically the correlation that date back until 2010, basically the inception of BTC until the present day. Very, very cool website that we have here. We can choose from an array of different cryptocurrencies, different asset classes. We can see that there are stable coins, there are indexes, and we have traditional assets like the US dollar, gold, S&P, and the VIX. So very useful website that we have here. And the one particular thing that I do want to look at specifically is the highest point of correlation that we've ever had within the S&P and the within BTC and the S&P on a 90-day time scale. So within 90 days, what was the correlation? And we can see late 2018 was the highest point of correlation, which was around 0.37 was the highest point of a positive correlation. And we're going to look at this area within the chart, but we will talk about another topic involving BTC. But this is the first thing I do want to talk about is the correlation between the S&P and BTC. So I'm going to get a little bit of water, and then we'll continue with this live. All right, so what this chart shows right here is the two white lines on the outside is when the price, or sorry, when the positive correlation gets above 0.2, and it's a correlation of either 1 to 0, 0 meaning there's no correlation, 1 meaning it's a direct correlation, and it's 0.2 when it's above, on November 2nd it's above 0.2, and on December 14th it's below 0.2. So this is the high correlation area, and then within the green zone is the very top where we had the highest point of correlation. So let's just first look at the two price actions right here. Let's just get our snip. So we started seeing increasing correlation when we saw a little bump up, and then we saw the first move to the downside, and then when we started to see BTC really fall to the downside, we saw high correlation within the equities market and BTC. Let's just draw that to the downside, and then we saw a little consolidation, and the second half of this zone right here was an absolute plummet to the downside. For BTC, not so much within the equities, but we can see why there's a high correlation. We got to move up, we got to move up, we got to move down, we got to move down. And then on here, you get a little move up, you get some consolidation, but you do end up not having the highest correlation unless you're not really able to see those charts too clearly, like that. I guess you could draw in that one big move to the downside there, and then you see a bit of a hesitation to go to the downside, and you see a bit of a move up, and then this is where BTC absolutely plummets down, and then you see a next move down there. But the S&P is actually not that aggressive to the downside compared to what we see within Bitcoin. You see a pretty big rally, and then you start to see the correlation decrease. Now what's surprising, in my opinion, is this is this pre-sequel to the big dump, which is right here. And by the time the S&P is actually truly in capitulation, BTC is basically getting away from a positive correlation within the traditional markets, which is, in my opinion, exactly what we're looking for. But we can see that within the start of the fall of the S&P, this is the S&P within the same time frame. Let's just get this right here. I think it's this guy. Perfect. So this is that same chart that we have right here. We see three highs here, and then you see a huge move down. We see three highs here, huge move down. I just put a Fibonacci from the all-time high here to the low, where we see key levels of support being held with candle closures at the low there, the swing low. And then you see the price hit the 61.8 and the 50% supply zone very clearly. Move down, got a significant push back to the upside, but inevitably we did break down and actually hit the extension of the 61.8. But going back to BTC, we can see that as the price capitulated around right here is when you saw the correlation decrease with Bitcoin, which in my opinion is great. But what is a speculation that I'm still having on a bias for the market is that we're still in the initial bearish moves that we're seeing for the S&P, which is then going to tie into our Bitcoin analysis, because right now, in my opinion, we're yet to see that significant move to the downside, and we're still in the consolidation phase, which if you're looking at the S&P, I would say that you would agree with that. So when we are looking back at the correlations and how it actually came together, I think we need to have this next major leg down before we start to see the decoupling of Bitcoin and the S&P 500. And if we bring this chart back up again, let's just zoom into where we saw that increase and decrease. You see the correlation get higher and higher and higher and higher, and then you see a topping where you're seeing a series of highs that are not able to break this around 0.37 or 0.36, let's say, and then you start to see it come down pretty significantly. Now, within the current correlations, let's just see what we see right here. We're still seeing the price make higher highs and higher lows. So the correlation is still positive. And then if we look at what we saw last time within the massive spike in correlation, we saw a big move down. We saw the S&P hold. You're seeing BTC hold its correlation with the S&P for a while. It's not, instant. It takes, this was basically almost half a month here, and if you're looking at from basically when it started to spike until it ended, it's about a month and a half. So these correlations are not days, they're weeks, if not multiple months, it seems like. And then you do get the decoupling where you get the correlation to get lower, and this is very positive in my view. When you start to see the major capitulation within the stock market, when you see that huge move down at the end of December, you're seeing BTC actually spike in the opposite way, decoupling from the stock market. Now, in my personal view, we haven't hit this yet because there is the Miner Capitulation that is the fundamentals for my bearish view on BTC, which we'll get into a little bit later. But just in terms of the correlations to start off the video, I do think that we're still within the high correlation phase, not just in terms of the chart, but in terms of the fundamentals, both in the equities, kind of global macro, obviously with COVID and oil, that's very, very detrimental for the US economy, which is bearish for the stock market. And then you also see the minor capitulation cycle coming in for BTC, where there's a lot of sell pressure getting added on within the market, and there's going to be inefficient miners that are going to capitulate due to the lack of profitability within their operation. So yeah, in my view, I think the correlations will decouple, as we saw in 2018, where the S&P started to really capitulate down, have a huge move down. That's where we saw in end of 2018. But then you saw BTC start to break off of the correlation and decouple from the high correlation we saw back in this phase. If we zoom all the way out, the highest point of correlation we saw it go increasingly to the upside, and then you saw decoupling. I think that can very well happen here, but in my opinion, it's just a little too early to say that that has occurred yet. So I do think that we could see another move to the downside within BTC, just in terms of correlations within the equities market, because I am bearish on the equities market, especially the US, because the bounce has been greater than basically any other index we can see globally. And although this is a cryptocurrency market update, we are, I guess, let's look at this really quickly, because this was for global macro, but with the global macro side of things giving us opportunities to have more of a bias to the downside on BTC, we want to validate that bias. So now let's look at the global indexes of different stock markets here. We have Canada, Germany, we have the UK, which is the FTSE, we have the US, and then we have the Russell 2000, which is the small caps. But we can see there are different indexes from different countries around the world. And we have within each chart a supply zone, which is ranging from the 50% retracement level to the 61.8% retracement level. And we can see the S&P 500 has entered into the 50% retracement level, has not hit the 61.8, but has entered into the supply zone, just right in that range there. We're bouncing within this zone, consolidating sideways, making a lower high and a lower low. So we are making a little downtrend if you are looking from a smaller time frame, but the main thing is we've broken that ascending wedge, and it looks a lot more bearish, and we're just in a volume distribution structure in my view. But something to note is there's not really an exchange or a index that I've seen that has actually bounced above the 50% retracement level. Canada, the TSX, has not yet bounced to the 50% retracement level. It's above the 32%, which is just right there. So if we do get the coordinate, that's the rectangular zone. If we do just fill this like so, we can get the 38.2, and then we can see that it broke above it, and now we're holding that as a level of support. So it does prove that there is some level of validity within that zone, but the main area we want to be looking at is the 51 to 68, 61.8. But we can see Canada has not hit the 50%. Germany's DAX has not yet even hit the 50%, and we see a similar structure formed where we see a huge move down and then a bounce that has been less significant than the S&P. This is the FTSE. This is in the UK. Very, very weak. We're seeing, I don't even think it hasn't broken the 38 level that we drew in on the TSX, which is, in my opinion, definitely showing weakness within the bulls. And then we see the S&P here in the United States go all the way and surpass the 50% retracement level, and the Russell 2000, which is going to be for the small caps, has not yet even hit the 50% and is holding actually the 38 level as a resistance if we actually do draw it in. So in terms of the overall strength of the different indexes around the globe, we're not seeing really any huge demand for buying up assets. We're seeing a lack of bulls entering the market, and we're just consolidating right now as an entire world is on the stock market here. And a lot of people may say we've priced it in. I personally don't think so, looking at historic timeframes, historic recessions that have occurred in the past. So let's now talk about this mining capitulation that we've talked about for BTC for weeks now, and we haven't really seen any bearish sentiment at all. BTC actually broke its recent high of 7,400, made a brand new high, and it's consolidating now. So yeah, definitely a lot of people are questioning that this BTC bull run has already started. Is it time to buy right now? I'm personally going to be hesitant. I do have long-term positions and investments in Bitcoin, but in terms of trading my portfolio within Binance and Bybit, I personally am going to be patient because of the fundamentals driving my bias. Now we can see this is the previous market Miner Capitulation cycle that we've encountered, and this was in confluence with the highest point of correlation within a chart. Member, if we draw right here, this was that huge move down from 6K that we were consolidating all of 2018. Exact same situation we have right here. This was that same zone, that 6K zone in 2018 that we consolidated on. And then once we started to see, this is completely separate from what we just talked about in correlations, but it's still actually very relevant to what we're trying to convey as a message. When we started to see the price of Bitcoin around the same cost as to mine one Bitcoin, you're seeing a lot of miners on the brink of bankruptcy, on the brink of not being profitable. So this is the average, meaning there are going to be some miners who are going to be way below the cost we see on this chart right here, which during, let's say, October of 2018, on around there, the fall, one Bitcoin costed $6,500-ish USD to mine. And the cost of one Bitcoin was around the same. So, input, output, you're not getting a whole lot out of it. And then once you started to see once you started to see the price of BTC move to the downside, it's a risk-on asset. In my opinion, BTC is still regarded as a risk-on asset. It does not hold the safe haven attributes in terms of how the world sees BTC just yet, because the US dollar has been working fantastic as a safe haven. BTC suffered a massive loss when there was that huge liquidation where assets across the whole board in March sold off gold, silver, BTC, equities, really everything. Really, except for the US dollar, that absolutely skyrocketed. So then right now, people are looking for the US dollar as a safe haven instead of more speculative, more volatile assets like BTC. I think gold, just because of how long it's been perceived as a safe haven, is obviously taking a lot more of the demand, which does make sense. You have one asset that's lasted 10 years, one asset that's lasted 5,000 plus. Which one are you going to be looking for stability during this uncertain time? Obviously, gold is going to be your primary way. But once you are going to be able to, once you do see the shift of USD getting weaker, lack of confidence due to too much money printing, I think you will see the lack of confidence in the United States dollar, and then investors going towards more speculative but more stable fixed supply assets like BTC, and I think the cryptocurrency market will absolutely boom. But in the short term, I do think that there still will be some bearish sentiment and bearish movements, and that's why I haven't been really longing BTC really. I did take a small long on the way up, but I've just been patiently waiting for my big short that's been playing out for weeks now. Within the equities market, really, that's really where my focus is, because I do think that backtesting different recessions, this is going to be a pretty big move here. And if I'm wrong, I'm wrong. That's how life goes. But I definitely am putting my neck on the line here. So, talking about mining in terms of what we currently see, we see that there was a massive difficulty adjustment that we haven't seen yet. In terms of difficulty adjustment, we're talking about the cost to operate a business mining BTC. And how can we see this? We see that these drops right here show the cost to mine one Bitcoin. And we see the bottom here is going to represent just the electricity to cost to mine one Bitcoin, and that's going to be a major part of the total operational cost. It's the majority of the actual cost to mine Bitcoin is the electricity, and then above here is going, just at the high here, is going to be the total cost. Now we can see when we had that capitulation, there was a point where profitability was very thin. There was people who are still profitable during this time and are still profitable right now, but on average, you're seeing very, very thin margins like we can see right now. And we did see some miners capitulate right here, because you did see a difficulty adjustment with that blue line correcting downwards. So the hash rate decreased, which means that there is less difficulty within the network. And that was a small difficulty adjustment. And we can see a similar thing happen right here, where you saw a small move to the downside, but you don't see the major correction here within the electricity, within the hash rate, within the difficulty. And that's really what a miner capitulation is it's too much difficulty coming in through the hash rate, because it's increasing so much that it squeezes out miners, and the difficulty has to adjust. And that's only going to adjust when miners capitulate and stop mining. And right now we haven't seen the difficulty adjust yet to a level of significance that individuals who are very well versed in the space have mentioned. Like we can see right here, this is the podcast from Pomp. He is a pretty important figurehead in BTC and the community. He's pretty well known in the whole space, and he has an interview with Matt, who is the CEO of Blockware Solutions, a Blockware infrastructure company specializing in Bitcoin mining hardware procurement, tools, basically mining rig colocation, as well as professional mining and staking pool operations. Very, very interesting podcast that he has. He talks about the mining capitulation, what happened in 2018, what could happen right now. He goes really in depth with not just the actual process and fundamental structure of how this actually operates in terms of a cyclical pattern, but he also goes in depth with who has the newest mining rigs, because that is going to give you a lot of information as to how efficient they will be, because it's one thing to have cheap electricity, it's another thing to have efficient tools and products that will give you the best bang for your buck in terms of how much electricity you have and how much Bitcoin you're able to mine. And if you're not upgrading, if you're not investing back into the business to get those brand new pieces of equipment, you will suffer the consequences by not being efficient during these difficult situations. And no one's going to bail you out. There's no bailouts from the banks or anything. This is true free market capitalism. And the people who are efficient, the people who are saving for a rainy day, who are investing back into the business, will be able to profit from the long run in this situation. Whereas the people who are inefficient, who are for short-term gains, will inevitably leave the market. And that's what a capitulation is. Difficulty adjusts when people leave the network and when people leave the mining pool, because when there's less miners going for that block reward, the difficulty gets reduced. When there's more people, the difficulty increases. And that's what we're seeing right now. We haven't seen that difficulty adjustment like we see in that previous market capitulation. So yeah, that is my view of the cryptocurrency market. We really hope you enjoy it. If you do have any questions, drop them in the comments below and we'll be sure to answer them. I know it's definitely a crazy time. Before I want to end the video, I know a lot of people are thinking, why in the world is he bearish if he is thinking that BTC is going to provide long-term opportunities for huge price appreciation, which I completely do think is going to be not just a plausibility, but I have pretty high conviction that it will occur. And it's because if for an investment, I'm extremely bullish, but for a trade, in my opinion, risk reward right now is pretty low, because I have high conviction that the stock market will fall. It's in consolidation right now. It hasn't really made a first major crack to the downside, but I do think it will. And once that does occur, I think that the miners will get squeezed out. There will be additional sell pressure coming into the market, and the bottom has, in my opinion, the bottom has to form some sort of formational low where there's going to be a base created. This is not a base. This is a huge move down and then a bounce that, in my opinion, looks like it's weakening here, as are lower lows, or there are higher highs and higher lows, but they're slowly getting less and less high and less high for the lows. So we'll see how it goes. On the smaller time frames, I do not really see anything right now that I want to trade. This is the 4-hour time frame. I'm not day trading BTC. It's, in my opinion, really noisy. We were initially holding below a series of lower highs right here, where we saw an anchor point. We saw our our lower high, and then we saw our lower high right here, and I thought we were going to hold here and then just create a squeeze that were occurring. I thought that was a pretty good setup. I did not short at the resistance there, so I did not have money on this trade, but we can see it did break to the upside. Massive candle, decent amount of buy volume, but if you are looking at the daily and the weekly, we're not seeing significant buy volume coming into the market. It's not increasing, it's decreasing, so there's less and less buyers coming in. But overall, we did make a new high. I did draw a anchor point right here. First touch, second touch, third touch, so there is a potential ascending resistance and ascending support right here, where you see support, 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 support all along here. And then we're just consolidating. Yes, we are creating a series of higher highs and higher lows, but the fundamentals are giving me a lot of hesitation to long BTC, and I totally don't mind. The thing with having two separate accounts of investments versus trading is the fact that if you are not long in your trading account, you are still incurring the price appreciation within the portfolio for your long-term investments, which is why having different portfolios, not just a single pool of money that you're trading from, is really good benefit. And that's, even if you are within the same asset class, diversifying the way you end up actually capturing profits in the markets, because long-term investments are very different from swing trading. If you're trading even for 2-3 months of a swing trade, it's different than if you're investing for 5, 6, 10 years. Very different way of approaching the markets. So that is going to be the video of the day. Thank you very much for watching. If you have any questions, drop them in the comment section below. I don't really have any actionable items for BTC, to be completely honest. I was a little bit surprised of this move up. We are seeing the S&P, the Dow, move up a little bit today, but I'm not really worried, to be completely honest, at all. I'm very, very comfortable with the amount of room I still have within the stop loss and my entry I've averaged in within the S&P. I am still probably going to be adding more. I just want to see the first crack below around 2740-ish. I think that's where that low is. Let me just look right here. Yeah, around 2740, 2735 is around where I want to see the price break below before I start to really add on to my short-term short position for the S&P. So that's basically the analysis. We really hope you enjoy it. For any Performante Premium members who do want analysis on alts, feel free to ask. I'm very alright with providing any analysis. But that is going to be it for the cryptocurrency market today. Thank you very much for watching, and until next time, have a good one.